Hey family, it's Camila Stevenson and we're talking about wealth right here. Now, everybody who owns crypto, I know you're waiting to guess how XRP could probably reach double or triple digits right now. And most people are looking in the wrong direction. They're starting with the charts. They're arguing about market cap. They're debating utility. And meanwhile, the biggest macro shift in 30 years is happening on the other side of the world. Japan, after 3 straight decades of zero interest rates, is experiencing a financial earthquake. Yields in Japan are exploding. Capital is rushing back home. And one of the most powerful forces in global finance, the yen carry trade, is breaking apart right now as I speak. And when you understand what that means, you start to see why XRP might be sitting in a position that very few people are even paying attention to. Now, I'm not here to tell you what XRP is going to go to. That's for you to do your own due diligence and understand whatever your expectations are yours alone. Now, listen, I do want to say this is not financial advice. I'm not telling you what to buy, hold, or sell. I'm just breaking down the macro picture in a way that actually makes sense so you can make smarter decisions for yourself. Now, if you love content like this, make sure you hit that like button and please do subscribe so that you don't miss the next video. Now, let's start with what's happening in Japan right now, because this is the foundation for everything that follows. For over 30 years, Japan kept interest rates at or near zero. That means borrowing yen was almost free. And because it was basically free money, global institutions got addicted to what's called the carry trade. We'll break that down in a minute. But here is the part that most people don't realize. Japan's interest rates are not zero anymore. They're rising fast. The 10-year yield in Japan is around 1.85%. The 30-year is around 3.4%. And the 40-year is around 3.71%. Now, for Japan, a country that lived at 0% for decades, those numbers are massive. It's like going from standing water to a tsunami. Now, here's why this matters. For 3 decades, Japanese institutions didn't want Japanese bonds. Why would they? Yields were flat. There were no returns. So where did they put that money? Well, they put it into the U.S., into U.S. stocks, into U.S. bonds, into U.S. tech, and yes, even crypto, including Bitcoin. But now Japan's yields are rising, which means for the first time in 30 years, Japanese institutions do not need to buy U.S. assets to get returns. They can finally make money at home. So we're seeing something we haven't seen since the 1990s. Capital is flowing out of the United States and back into Japan. Now that flow, that's a reversal, and it's one of the most disruptive forces in global liquidity. And it triggers something called the reverse carry trade, which is where the real chaos starts to begin and where XRP becomes extremely interesting. Now, I want to break down how the carry trade works in a way that actually makes sense for you, because if you don't understand this part, you're going to miss the entire setup. Now, let me go back to something I said before, which is for 30 years, that's a long time, Japan had near zero interest rates, which means borrowing yen was basically free. And global institutions, banks, hedge funds, institutions said, hold on, if we can borrow money from Japan for almost nothing and then invest that money somewhere else with much higher returns, that's free profit. So here's exactly what they did. Number one, they borrowed cheap yen at, again, 0% interest. Number two, they convert that yen into dollars. So now they're holding U.S. cash. And then number three, they use that cash to buy higher yielding assets. Like, as I said, bonds, stocks, tech, emerging markets, crypto, all of that. This was the carry trade. Borrowing at almost nothing, invest 4, 5, maybe even 10%, keep the difference. And because this was so easy and so profitable, it pumped global markets for decades. People don't realize how big this really was. We're talking about trillions of dollars leaving Japan and flooding into the U.S. and global markets. And this is part of why the U.S. stock market grew so aggressively. The bond market stayed strong. Bitcoin got massive liquidity during risk-on periods, and global risk assets boomed. The carry trade was like global oxygen for the markets. But now that Japan's yields are rising, that oxygen is getting cut off, y'all. And the moment the carry trade stops working, the moment the math breaks, meaning the math ain't mathing no more, we enter into something called the reverse carry trade. And this is where things get really messy. Now, family, before I break down the reverse carry trade and why it matters for XRP, I really need to say say this quickly. If all of this sounds new to you, or if you realize and nobody ever taught you how global liquidity works, please don't stay confused. Get educated. The best place to start is Stock Up University. I'm going through it myself, and it's one of the clearest, most practical financial education programs out there. Larry has extended the Black Friday sale just for you, and he gave my audience an additional discount. So if you use the link in the description and enter the code EARN, you're going to get that extra savings. All right, so here's specifically what's happening now so you can have a clear understanding. Japan's interest rates are rising. And when rates rise, Japanese bonds become more attractive. And when Japanese bonds become more attractive, institutions no longer want to keep their money tied in U.S. assets. So what do? They start selling. And I don't mean selling a little bit. I mean massive forced selling of the U.S. stocks, the bonds, the techs, the markets, all of it, the crypto, Bitcoin, whatever. Why? Because they borrowed yen decades ago. They converted it to dollars, invested those dollars in global assets, and now the yen is getting stronger and Japanese yields are rising. Those investors have to unwind the trade. They have to return the yen that they borrowed. And the only way to do that is to sell the foreign assets that they bought and convert the cash back to yen. That process right there is the reverse carry trade, and it causes sudden liquidity shocks, big market dips, increased volatility, selling pressure hitting assets that did nothing wrong, and forced liquidations in risk markets. This is why you may see some markets starting to shake even when the U.S. economy looks fine. It's not about fear, and it's not about the charts. It's not about the FUD. But instead, it's macro mechanics. Markets don't fall because people are emotional. They fall because liquidity gets pulled out of the system by macro forces that most people don't even understand. And so here's the key part. Bitcoin could get hit hard because it's one of the most liquid assets in the world. If institutions need to free up cash quickly, they sell Bitcoin first, not because Bitcoin is bad, but because Bitcoin is easy to sell instantly. And this is where the opportunity for XRP starts to open. And I just want to tell you, I have both XRP and Bitcoin. And if any of them were to fall, I'm just going to load up some more. But with that being said, I want to talk about why XRP is uniquely positioned in a liquidity crisis. Here's where everything is going to come together. Because when people hear liquidity shocks, they think everything goes down, everything gets crushed, everything loses value. And in short term, yes, markets can get very shaky, but in liquidity crisis, something interesting happens. The tools that can move money fast becomes more valuable, not less. And that's where XRP enters the conversation. Let me explain this very clearly. Japan is not just another country. Japan is one of the largest FX markets in the world. Japan is also one of the largest cross-border payment hubs in the world. That means Japan's institutions move trillions of dollars across borders every year. And Japan has something the rest of the world doesn't. Deep ties to Ripple and XRP. SBI, one of the biggest financial institutions in Japan, has been connected to Ripple for years. They've explored digital settlement. They've invested in Ripple products. They run validator nodes, and they've been public supporters of XRP utility. So now imagine this. As the reverse carry trade hits, liquidity dries up, spreads widen, FX pressure increases, cross-border settlements become more expensive, money moves slower, and markets are stressed. Do you know what banks and large institutions prioritize during financial stress? They prioritize speed, settlement certainty, low liquidity costs, reduced FX friction, and XRP was literally built for that. This is the part that most people are going to miss. XRP is not a hype-driven asset. It's an infrastructure asset. And infrastructure becomes more valuable when the system is breaking, not less. If Japan needs faster settlement, lower cost transfers, tools that reduce liquidity risk, and the ability to move money cross-border instantly, XRP is one of the few digital assets that can actually step in. Now, this is not speculation. Again, this is macro logic. Let me put it simply. If the problem is liquidity, the solution becomes assets that can provide liquidity. That's XRP's entire purpose. Not memes, not hypes, not vibes, liquidity, settlement, FX rails. This is why Japan, of all countries, is the most important indicator because Japan is the epicenter of FX flows. Japan has already tested Ripple technology. Japan is open to digital settlement, and Japan is entering a 30-year financial transition. When a system this big starts changing, the tools it chooses to fix those problems can get revalued overnight. So this utility-driven demand could create realistic high numbers of XRP, okay? So how does realistically XRP reach triple digits? Again, I'm not telling you what XRP is going to reach. I'm just sharing with you the information so that you can see the things that could come into place that could probably allow XRP right now to become more valuable. So I'm just showing you what would actually have to happen for this kind of revaluation. I'm not sharing this because I feel bullish or anything. I actually have lower expectations, but hey, I'm okay with any opportunity that goes above my expectations. So it has nothing to do with my personal opinions at all. Nothing I say is financial advice. I'm sharing for educational purposes only. Do your own diligence. But I'm talking about the fact that it's math, it's liquidity, and it's utility adoption. So let me break that down clearly. When an asset is used for real settlement, especially cross-border, the demand comes from institutions, not retail. That's why I'm saying I can't make this price go up. You're not going to make this price go up. It's the institutions and the demand that would make this price go up. And institutions don't buy $50 of XRP. They don't always dollar cost average. They don't flip short term. They buy in millions, tens of millions, and sometimes billions. And I know because I'm watching the whales load up and they hold because they need liquidity daily, hourly, or even by the second. So here's how the price mechanics work in a utility driven model. And I do want to note that I gave this same hypothetical situation to AI and they said the same thing. And so, again, it's not about the price point. It's just about if all of these things explode at the same time, almost like a big catastrophe all at once. This is how we get to a high XRP price. Number one, supply becomes locked up. So when banks or institutions use XRP for settlement, those units are not flipping around on exchanges. They sit in custodial accounts, liquidity pools, corridor wallets, private infrastructure. XRP's liquid supply starts to shrink, and this dries up the available amount on the open market. So when supply shrinks, price rises by mathematical reality. Number two, institutional demand is sticky. This is the major difference from hype cycles where retail buys, retail sells. Okay. But institutions, they're not buying XRP because they believe in it. They buy it because they need it. They need it to move money. They need it to settle transactions. They need it to manage liquidity. They need it to reduce FX costs. They need it to speed up cross-border flows. This demand is permanent, not emotional. Sticky demand plus low supply equals structural revaluation. Number three, liquidity corridors multiply the effect. If Japan opens corridors using XRP even lightly, you're going to get constant buy pressure, deeper liquidity pools, market depth increasing, big players entering quietly, stabilizing price floors, and upward pressure from settlement demand. One country with huge FX flows is enough to create measurable price changes. But if multiple corridors begin to use XRP like Japan or Korea or Southeast Asia or the Middle East, the effect compounds. Then four, you have macro liquidity plus utility equals higher floors. This is the part that a lot of people just don't explain. Utility doesn't create hype spikes. Utility creates new floors, levels that XRP doesn't fall below anymore. Now, retail, they pumps can shoot price upward temporarily, but utility adoption holds price in place. So this is how you would get to maybe a $3 to $7 range with light usage. This is how you could get to a $10 to $30 range with corridor adoption. This is how you can get to $50 to $100 with major settlement integration, and then 200 plus in extreme liquidity crisis. All right. And that's what we could be dealing with if Japan chooses XRP. It's not magic. It is liquidity mathematics. If XRP becomes part of Japan's FX plumbing or any major liquidity system, the price must rise to handle the volume. Utility forces valuation. Okay. And this is because of the needs, the usage, and the flow. Now, I want to go even deeper because when I talk about possible triple digit XRP, I'm not saying it because it sounds good or because I'm trying to make you believe it. I'm really not. I'm just saying it because when you look at the math and when you understand liquidity flows, FX value, cross-border settlement, and institutional demand, you start to see very clear, realistic price tiers. If then situation. Let me say that. Now let's walk through them one by one so you understand. And again, I did test it with AI. And so we did talk about tier one, which is light adoption, $3 to $7. This is where, let me explain it. Japan uses XRP lightly. Only a few corridors, test ripples, rails, small scale liquidity support, minimal bottleneck reduction, or limited institutional demand. Nothing crazy, just basic utility. This alone could push XRP price from the 3 to 7 range consistently. This is the training wheels phase. And again, I'm going through these numbers. These have nothing to do right now with the charts. These are macro events, okay? Tier two is the medium corridor usage. That would be $10 to $30. Now you have maybe several corridors open, cross-border flows increasing, more institutions using XRP for intra-bank transfers, FX stress making fast liquidity more valuable, and settlement speeds saving banks real money. This is where the demand outpaces the liquid supply left on exchanges. $10 to $30 can become a natural floor. It's not hype. It's just what happens when real infrastructure starts using a finite asset. Tier three would be heavy settlement integration, maybe $50 to $100. This level could require Japan using XRP for major liquidity assistance, SBI level adoption, large FX corridors using XRP as a bridge, significant flows moving through Ripple rails, banks demanding XRP to reduce liquidity risk, and utility-driven structural revaluation. This is where XRP no longer trades like a crypto. It trades like critical financial infrastructure. So $50 to $100 can become a mathematically reasonable valuation for the liquidity role XRP would be playing. This isn't moon math. It's macro math. I'm going to stress that. Now, here is tier four. Let me be very clear here. I am not saying that this will happen. I'm saying this is the upper bound of what's possible if the global financial system experiences a liquidity crunch and Japan or other major corridors lean heavily on XRP's utility. I want to make that clear. This tier assumes a major liquidity shortage, global FX stress, institutions needing fast settlement tools, XRP being the only scalable option in certain corridors, and huge amounts of capital requiring rapid, cheap settlement. In that situation, XRP's price adjusts to handle the liquidity needs. It's not emotion, it's not retail, it's macro necessity. This is how a fixed supply asset reprices itself to serve a larger role. Now, why am I breaking it down this way? Well, because I want you to understand that there could be possibilities. Anything is possible with crypto, honestly, but it's liquidity-driven revaluation. The price adjusts to the job that it's performing. Now, I also want to say this on the flip side and make it very clear. If XRP ever reaches those higher price tiers, it's not going to look like a meme coin pump and then a massive crash. That's not how utility assets behave, okay? So when a bank, a corridor, or a government institution adopts something for liquidity, they don't flip it. They don't buy it on Monday and dump it on Friday. They accumulate, they hold, and they keep it in circulation for settlement. That is the biggest difference between XRP and hype-driven coins. XRP's demand would come from institutions, not emotional retail cycles. That's why I'm saying it ain't my decision. It will be institutional decisions. If this ever were to happen, institutions, again, they do not chase green candles. They don't panic sell. They don't FOMO. They don't trade off vibes, and they don't need XRP to the moon. They need it to work. Okay. And if utility adoption kicks in and XRP becomes part of a liquidity corridor, even in one country like Japan, the price doesn't spike and then crash. It reprices and it holds, because institutions, again, they don't buy and dump, they buy and use. And this is why I say XRP, there is potential to go higher, double digits, triple digits. I'm not here to tell you. I'm just telling you about the utility math, the macro necessity. And again, it's a finite asset that's repricing to match the job that it's performing. Okay. So let me leave you with this. A possible double, triple XRP in a short amount of time is not wishful thinking if these events happen. It's about understanding macro liquidity, understanding Japan, understanding utility, and understanding how real world financial systems revalue assets when the underlying job gets bigger. Okay. Now, most people never see these shifts coming because they're watching the price. And that's why I say it's got to be macro centered if you're going to get the whole picture of what the possibility is, not what will happen, just what the possibility is if these things were to play out. So you don't have to predict the future. And I'm telling you, I sure ain't trying to predict the future. I do not have a crystal ball. None of us do. None of us can 100% guarantee anything on any side. We're going to watch it all play out. You just have to pay attention to the forces that's shaping it. And that's what I'm looking at. And if you want to go deeper, not just reacting to the noise, but truly understanding money and building wealth the right way, then you need real financial education. That's why I always point people to Stock Up University. I'm going through it myself, and I'm going through some parts over and over. I'm telling y'all, it's so good. And your financial literacy will jump to an entire new level. Right now, they're still extending their Black Friday sale. He's been so generous. And you can use my link below with the code EARN to get an extra discount. And if you want support, if you want coaching, if you want a community that's going to help you to think towards the future and really get your portfolio and your understanding of wealth building in alignment, that's what my membership is for. It is hands-on coaching. And yes, I still do have my Black Friday deal going. I've extended it just a little bit. You can use the code Black Friday 300 before it ends. And at some point that code will end. Not sure if you're watching the video when it's ended or not, but I want you to get educated. I want you to stay calm. I want you to move with intention and understand the macro, because that is where real wealth is built. All right, family, stay wise, stay wealthy, and I'll see you in the next one.